Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into what's impacting mortgage rates on a daily basis. So, if you're in the market looking at refinances or purchases, this is a great video to follow as we kind of get into what's affecting rates today and try to give you a little scope into what could be looking down the week as to what could impact rates as well. Uh, whether it might be headline news or economic data might be released or some geopolitical, or sometimes the sentiment in the markets have changed where sometimes good news is bad news. And if you're not in the market, you may not know these things. So we're kind of here to help you and help guide you. So if you guys are again, looking to refinance or purchase, looking to being told to lock, maybe this might give you some information as to if it's a good time to lock or we want to hold a little bit, see if things get better or not. So a little bit about myself is I am a loan officer. I do work with a national lender. We're here to help in answer any questions you might have, whether if you're looking to have questions regarding mortgage programs out there, if you guys got questions about where the rates are going or anything about these rates or anything about the process, we're here to help. We would love to earn your business, so if you would like to at least touch base with us, I would love to be able to talk to you a little bit about how we can help you guys with your refinancing or purchase needs. Again, please reach out. We're here to help you guys. Without further ado, we'll start off with the economic calendar here today. We got a number of items starting today. Today's the first, if you recall, if you've been following my videos, today's the first day of the jobs data that we get for the month of October. So we get the ADP report today, and then tomorrow will be initial jobless claims, and then Friday will be the big day, which will be the Bureau of Labor Statistics. So we'll start with the ADP. Back in September, came in initially at 568,000 new jobs. These are private payrolls. However, that was revised lower down to 523. Forecast for this month of October was 400,000. It came in much higher at 571,000. So pretty good number there overall. We also got factory orders for the month of September. So August came in pretty high at 1.2%. However, that did get revised slightly lower to 1%. It was supposed to be almost nil for the month of September. However, it did increase by 0.2%. Then we go over to the ISM non-manufacturing PMI. This is the services sector. Anything above 50 is considered expansion. So we're doing pretty good so far, looking at 61.9 in the month of September. Forecast was supposed to be a slight uptick to 62, and it jumped up much higher at 66.7. Now we had some other indexes doing very much the same thing, like the IHS market that also showed an increase. China had a pretty robust one with the Kaizen for the month of October. So China was also looking pretty robust on the services sector for them as well. So globally, for the most part, this has been a good month. October, things have been boosting for everybody here. And last but not least, we will have the Fed rate decision. So we are not expected to have any rate changes today. However, they are everybody's highly anticipating to listen to them talk about their tapering plans. So it's expected that they will begin their tapering. We don't know exactly but there's estimates out there, approximately maybe 15 billion a month reduction. Right now, they're currently buying 15 or 120 billion dollars worth of mortgage-backed securities and treasuries. So I think that with the combination there, so I think they'll be reducing that each month until it basically stop, and that could end probably about March or to mid-year next year on that. But there's also going to be the discussion that now the Fed needs to start talking about rate hikes because there's a lot of concern about inflation. They need to control inflation. And basically, we're kind of getting to the point where we're past this transitory comments. So a lot of people don't feel these inflation data is going to be transitory. They feel that it's going to be here for basically ever or built in. So this is stuff that, because you're talking about wages, people aren't going to go back to making less money. The wages are a thing that are pushing things up. There's a number of items that are kind of pushing things up, and there's just no way you're going to be able to bring these back down as a result. So without that, we need to go ahead and try to raise rates to try to offset the higher costs and everything associated with it. There's also something else I kind of look at. I look every week, every Wednesday, we get the MBA reports their mortgage application activity report. And as we can see here, there's a slight drop in the purchase from last week to this week. And of course, the refinances have dropped a bit as well. So now let's go ahead and take a look at the mortgage-backed securities. Um, we are we started the day up a little higher, as I indicated yesterday, to be careful because we were showing some weakness here, and we did start off a little higher, but now we're down about 14 basis points and challenging the 25-day moving average, which took a long time to be able to break above. As you saw, most of last week, or towards the end of last week, we had a hard time trying to break it. We finally broke it on Monday, and then we kind of held it, but we got a little weaker when we tried to go advancing a bit further. And right now we are in the process of maybe breaking it again. So here's the volatility for the day. As you can see here, we're up a little bit, and we've been kind of going downwards since then. That's kind of where the days where the day is looking so far. So we'll wait and see. This could ultimately change. It could go drop a lot further once the Fed gives their taper policy. My concern is that last week we had a number of taper conversations from the Bank of Canada as well as the ECB, and basically they talked about tapering. Our bond market worsened. We did improve, but it did worsen for a bit. It did kind of negatively affect the market. So we'll have to wait and see. Right now we're kind of bracing for the Fed to give their announcement later today, and again, this could eventually change, and even tomorrow because they may not have digested all the information already right now. Stocks so far are kind of mixed. Nasdaq, I think, is the only thing in positive territory. They're kind of bracing for the Fed rate decision coming up ahead, and basically they've been taking the cues of late, mostly from Q3 earnings reports being reported. So here's the Treasury right now. Treasury started much lower at the technical level, and now like its counterpart, it's testing its 25-day moving average. We're up just under 1.57 right now, and again, we'll have to wait and see if that holds or not. Meanwhile, here's national average for rates: 15-year at 2.53 and 30-year at 3.14. So these are with rates already points built into the rate. So these are again, national averages that are out there. So if you're shopping around, these are for conforming limits, 30 and 15-year fix. Please take that advisement. So hopefully that helps. If you guys get questions about anything, again, reach out. This is pretty much a wrap for the video. If you like these videos, please smash that like button. We greatly appreciate your help in supporting the channel, as well as maybe follow. You guys have a great rest of your day, and we'll look forward to seeing you guys in tomorrow's video. Bye-bye.